Alrighty, I think we're live. Okay, so this week we are going to be talking about why a financial trainer and not just my accountant, because me as a layman, I didn't understand the difference and how they work together. So let's see if we can help other people understand why, what the difference is and why the two work together.
Yeah, awesome. Yep.
Yeah. So we've got 5 reasons why you have a financial trainer plus your accountant,
Okay.
to maximise your money, because that's after all what we're trying to do is maximise money.
Sure.
Okay, so why working with several, because there's not just accountants, but we are going to focus on them today.
Yep.
Why working with several financial professionals is a worthy investment of both our time and our money.
Yep. Yep. Definitely.
All right, before we get started though, for those who haven't tuned in before, this is Justin McMillan, who's the principal here at Smart Wealth. Welcome, Justin.
Good morning. Hello.
Ready for some questions?
Yes.
Excellent. Now, Justin, what are your qualifications?
Yep. So I've got a Bachelor of Economics degree at Murdoch from a long time ago now. But yep. So economics degree, also advanced diploma in financial services. Specialising in financial planning, which is good, staying on financial planner, out of the University of West Sydney, and also have speciality in direct shares, gearing, and stock managed super funds. So
There you go. All right, so you might actually know what he's talking about.
Yes, we hope most of the time.
Now, there's a lot of rules behind licensing. Are you licensed?
Yes. So here at Smart Wealth, we are licensed through an organisation called RI Advice, who then registered with ASIC. So they're a significant organisation, RI Advice. So we've got all the backing of them. If anything ever went pear-shaped, then clients could claim, and there's PI cover, and there's insurance, and there's people with deeper pockets than me that bankroll us, and so all that's there. So clients can always be have the assurance that if anything did go pear shaped, markets may go the wrong way, or things we don't have control over, and they feel aggrieved, and they can take that up with ourselves, and we'll help them through the process, and always endeavour to get the best outcome that they're looking for.
Awesome. So we have you're educated and you're licensed. So let's start covering the topic. Right, so we promised 5 reasons why you have an accountant as well as a financial advisor, or as we term it, a financial trainer. Yep. Okay, so first off is which direction are you looking? So you've got accountants and you've got financial trainers, and you're looking in 2 different directions.
Yeah, so accountants are normally, especially when they're talking about personal finances, looking backwards. So we give them all the information. They then go and put the right figure in the right box and send it off to the tax office to get the tax determination, and obviously look for deductions when they see fit to reduce the amount of tax we pay. So so most people have just gone through that process now of lodging their tax returns. So that's all to do with what happened from 1st of July 2016 up until the 30th of June 2017, which is great, but there's modifications we can do and deductions we can claim, but we can't change history either. So what's happened has happened. So it's our job as a financial trainer to look forward and and always try to provide the pathway for clients to go to the next aspiration, or tick off the next big expense they have, or the expenses are coming up against, as well as their aspirations. So what's happened has happened. We can't do it. We can't change history. Sometimes as clients we make poor decisions, and sometimes we make great decisions. We bank the great decisions and learn from the poor ones and move on, and and look forward, and see what aspirations are there for the future that you're looking to achieve.
So we're going to cover both. So accountant would be covering what has happened. Financial trainer is looking forward to what's coming in the year coming up.
Yeah.
Or the year after that, of course.
Some accountants, especially those who have small businesses, know their accounts are projecting forward all the time. You know, what are the trends happening and things like that, as far as revenue, expenses, profitability, customers coming through the door. So they're working with their business accountant to do that. So we do the similar on a personal level. What expected revenues coming up, either as a self-employed person or an employed person, and also the expected expenses coming up as well. And you know, if hopefully there's surplus, what we do with surplus, or there's a deficit, what we can do now to mitigate that deficit down the track.
Which brings us to point number 2. Now we're talking about the future, for the future planning and making a tax-effective decision.
Yeah. So as a wealth trainer, I'm not licensed to give tax advice. I don't know all the intricacies about the all the taxes out there. So that's why we always work with clients' accountants, and we come up with, I come up with the strategy for the client and always run it with their accountant first, to see if there's any they can do or anything they can suggest to tinker with that strategy slightly to make it more tax efficient for them, because it's, it's hard enough for clients to make a return without then giving that return to the tax department. So clients are taking on the risk of investing and all those kind of things. They want to maximise the return possible. So we're focused on the strategy and the investment, and then work with the client's accountants to ensure that the net result is highest possible for the client.
Yep. So point number 3, which you touched on briefly, about talking about small businesses and accountants working with small businesses to help them plan what's coming up and how it's working. So how does a financial trainer work in there?
Yeah, so once again, we're working with accountants with small business clients. So we're focused on their personal situation and their personal aspirations. The accountants focus on the business. So we bring the two together. Knows having a great business if it's not providing what you want to do from a lifestyle point of view, and conversely, it's no use having a great lifestyle if your business is going to go bust, in 2 months' time. So we work with accountants together to ensure that both those outcomes are met and prosper in the future.
It's about working with them, making sure it happens. Okay, so on minimising tax once more, because we all like to minimise our taxes. So you've had a great year, you've planned correctly, your accountant has minimised the tax for you, your plan has, between you, the financial trainer and the tax accountant, what do you do with the surplus?
Yeah, so besides having a party and going buying something for yourself, which is obviously going to give you the benefit for that year, why not look to invest that surplus so that benefit is comes back to you over a number of years, not just the first year. So if you're lucky enough to get a tax deduction, why not ensure that you get the benefit from it for the next couple of years, rather than just going and buying something, enjoying it for this year, and then having to come up with another deduction for the next year and things like that.
Alrighty, and our 5th point, the last one for today, is on investments. Bad investments. So, okay, you've made a tax deduction, but if it's a bad investment?
A bad investment's a bad investment. So, if it provides you with a tax deduction or not, a bad investment's a bad investment. So, I see a lot of clients, and the first reason, why do you want to invest? Well, I want to minimise tax. Okay, the only way to minimise tax is to effectively lose money. So, if you want to give away $1 in returns to get 50 cents in from a tax deduction, well, that's great, but it doesn't really make a huge amount of sense. Always look from an investing point of view, look at the investment first and then work on the tax efficiency second, rather than trying to find something that's tax efficient first and then trying to find the investment secondly. Is reverse that around, because a bad investment's always going to be a bad investment. If it there's no use losing $50,000 and getting $10,000 tax deduction for it. That doesn't make sense. Always work on the investment first, your strategy first, and then think about the tax consequences secondly, and then go from there.
That sounds great. So those 5 were, which direction are you looking? So we've got accountants and financial planners working together to cover what did happen and what is coming. future planning and working with tax efficiency, small businesses. So we've got covering both the business and the personal side, minimising tax and making a plan for that surplus that you have once you've minimised your tax, and bad investments. So thinking about the psychology behind that and making sure that you're making a good investment, not a bad one. Okay, so normally at this point what I'll say is give us a call and check in with us, and you can have a 15-minute obligation-free meeting with Justin. But what I'm going to say today is introduce us to your accountant, because we do like to work with your accountant to maximise your outcome. So as in those points that we covered. So let us know who your accountant is. Say we've got the best accountant out there. We've got to tell you who they are. We'd love to hear all about them, because we're always looking for some amazing people to work with.
Yeah, awesome, yeah.
Okay, next week, why spend money if I'm trying to save money is our topic. So, and that'll be the end of that'll wrap up our introduction to financial training and where we're going from there. And then we can, you wanted to talk about green investments and some other out-of-the-box ideas. So again, if you have any questions or if there's any topics in particular that you want to cover, please do let us know. And we'll look forward to seeing you next Friday.
Awesome, sounds good.